Hi guys. Today we will analyze US Bancorp stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. US Banks' overall performance in the market is below average. Also recent evolutions are not positive. The short-term trend is negative, the long-term trend is negative. There should be more interesting stocks out there. Support levels are around $50 and $45. Next support level is around $42.70. Resistance levels are around $54.30 and $57.20. Next resistance level is around $60. In the last month the stock has been trading between $49.80 and $57.90 range. It is currently trading near the lows of this range. The stock has an average volume of 8 million. This is a good sign as it is always nice to have a liquid stock. The stock has been in a downward trend since January 2022. Be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth. Even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Valuing financial institutions. Understanding why financial institutions are different from traditional real sector companies is key. Banks function differently than traditional cash flow-driven companies. Traditional companies create products to make money. The products of banks are money. Banks are highly levered and they do not reinvest debt in the business and instead use it to create more money. They make money via interest. So, they view debt and interest differently. That's why, our favorite discounted cash flow valuation method doesn't work for banks and insurance companies. Intrinsic values calculations. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. The excess return model. This approach is used for financial institutions where free cash flow is difficult to estimate. Then, we will use valuation based on earnings per share, EPS, 5-year average PE ratio and expected growth rate. First model. Excess return model valuation. This spreadsheet contains some financial data that we will use for the stock valuation. In this valuation I will use margin of safety. 30%. Once we actually figure out what we think this stock is worth, we are only going to buy the stock if it gets 30% of what we think it's worth. It gives us a big margin of safety if our predictions are wrong. In other words, when something is worth $1, I want to pay only 70 cents for it. I want to be conservative with financial institutions. So, my margin of safety is 30%. According to our formula, the fair value of the stock is $114.21. When we apply the margin of safety to that value, the fair value of the stock would be $79.94. That's the price that I may want to pay for this stock. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for US Bancorp is 5.1. Minimum rate of return. I will use 10%. Because when we invest in individual companies, we are looking for a higher return than the S&P 500. For US Bancorp, analysts forecast growth rate around 6% per year in next 5 years, and future PE around 12. I will use 3 different scenarios for US Bancorp company: bad, average, and good. First scenario. US Bancorp will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 3%. Future PE would be low, 11. In this case, the fair value of the stock today would be $31. Second scenario. US Bancorp will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 4%. Future PE would be average, 13. In this case, the fair value of the stock today would be $40. Third scenario. US Bancorp will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 5%. Future PE would be high, 15. In this case, The fair value of the stock today would be $50. As you can see, today the stock is fairly valued, $50, if we expect the company's high performance in future. The fundamentals are good, and the stock looks fairly valued, and it also shows a decent growth rate. The stock has been in a downward trend since January 2022. It may go lower, before it recovers. Be careful. I like the company, and I like the stock at these levels. I may open a small position soon, and I will buy more, when the stock shows signs of reversal. Company strengths. U.S. Bancorp is one of the largest and strongest diversified financial services firms in the U.S. Services include consumer and commercial lending and depository services, cash management, trust, and investment management services. The company also engages in credit and debit card services, merchant processing, mortgage banking, insurance, brokerage, and leasing. It's the sixth largest U.S. bank by deposits. The company operates branches in 25 states. The bank is known for its consistent earnings performance, lack of concentration risk, and diversified income streams coupled with sound risk management practices, which have led to a good through-the-cycle asset quality record. USB also benefits from its solid liquidity position, supported by its robust and granular deposit base, stable capital ratios, and strong capital generation capabilities. Strong fee revenue in modi businesses, such as payments, helps insulate U.S. Bancorp from a flatter yield curve environment, and drive higher returns on equity. USB has a return on equity of 15%. This is better than the industry average of 12%. The bank's acquisition of Move Union Bank should provide additional revenue growth, expense synergies, and value for shareholders. USB has a return on assets of 1.4%. This is better than the industry average of 1.14%. Its profit margin of 35% is better than the industry average of 32.5%. With a yearly dividend yield of 3.64%, USB has a reasonable dividend return. On average, the dividend of USB grows each year by 10%, which is nice. Risks. Higher than anticipated credit losses, depressed loan growth, and an economic slowdown in USB's footprint adversely impacting the lending and payments processing businesses. U.S. Bancorp does not have the same rate sensitivity as peers, and will benefit less as rates rise. The company faces stiff competition within payments, often against players with even more scale, or fintech players that may be nimbler. This can threaten future growth, and pressure margins over time. In addition, the bank is subject to the Federal Reserve's annual stress test. The company is expected to show a small growth in earnings per share. In the coming 5 years, the EPS will grow by 9% yearly. The revenue is expected to grow by 6 to 8% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.